Okay, guys. So very quickly today, I will be doing a live trade breakdown on BTC, right? So that just I'll be teaching you guys the way I look at charts anytime I want to do my analysis. And we have done several, one or two, right, of this type on our previous lessons on the previous day. Today is day 21. So just a live breakdown using SMC BTC USDT. So if you guys have been following me on my Twitter page, you will notice that I've been trading BTC and running out the analysis, and it has been playing out back to back based on the analysis. So if you notice, right? So let's go to the weekly time frame, or we should even start from the monthly time frame on BTC, right? We want to do the analysis. So this is July. It has 8 days. Sorry, 8 hours for this candle to close. July 2025, and you can see it. The market has been bullish for a very long time, and if this candle closes like this, it will be closing bullishly to the upside, right? So this is just what we can see on the monthly. Okay. If you go to the weekly time frame, you'll see that market has been ranging. Market has been a kind of a range and refusing to go up, refusing to come down, creating that range. And remember, like what I said, when market created that range, there's always what we call buy side and sell side liquidity, right? Or we can call it swing low, swing high liquidity. We've explained external range liquidity, so it means there will be liquidity resting at this top here, and there will also be liquidity resting at this bottom, right? At this bottom low, these two regions. So you want to mark them, and it will give you a kind of uh because in S trading MCMC, what we do, we identify liquidity zones first. We look out the market direction and we identify the zone. Of course, we have seen the direction is bullish. Now we are identifying liquidity. That's the next point, right? And after identifying liquidity, we'll be looking for what point of interest that is close to that liquidity in order to take a trade. So for the weekly time frame, these are regions of liquidity. Let me put this so it doesn't get too long. And okay, these are regions I'm looking out. So I'm done with the weekly, nothing much. And you can also see around this area there is also an imbalance, right? Just below this, right? It's like an imbalance level right here. Okay, so just identification. You are not, I'm not catching setups, right? What I'm doing now, I'm not catching setup. I'm just running analysis. I'm just identifying what I know, right? And what I can see based on how market has been reacting. As simple as that. Okay, so like this, identify liquidity, identify imbalance that market has created when making that pump, right? Am I saying anything? No, just doing my identification. So I think I'm done with the weekly, all right? And so I can go to the daily time frame, right? So on the daily, I can see that imbalance very clearly, right? I can see the imbalance very clearly, and now I can see the weekly swing low that I marked as liquidity, right? I can see it very clearly also, right? Then I can now see the range. You can now see this range very clearly. So it just looks like noise, right? The market has made an impulsive move, then all of a sudden too much noise, doing nothing here on the daily. So on the high time frame, market has just been ranging, doing nothing, no direction, right? All we just know is it pumped, then after a while it has been ranging. Okay, so now we are day traders who want to catch something. We go to 4 hours time frame to look at the charts inside this particular daily range, weekly range. Can we see a particular direction that the market has been going, right, on and off from? Okay, so if you look at this, the market made a pump from here, from this low, pump to the upside, then made a low, pump again to the upside, right? So we have something like this. If you look at this, we have something like this, right? Then a pump. We have another thing like this, then a pump. Okay, just mapping out those structures. Then what happened? So this one is this place, while this is here. Then this movement created an imbalance, right? Which we have identified. Then all of a sudden, market did what? Went up, right? We're trying to mark out structures based on what we see on this 4 hours time frame, but we know on the daily time frame is in a range, but there might be a directional structure on 4 hours time frame that we can use. Then all of a sudden, the market did what? Came down, right? Took out this low, right? And it closed with a body. Okay, so if you look at this, what happened? Market took out this low and closed with a body, right? This move is called the market structure shift because market was bullish, then all of a sudden it closed with a body, created that shift. And remember, we said whenever market creates a market structure shift, the first move, right? The first pullback is called what? An inducement. So if you look at this, market made a first pullback, right? So what are we expecting? If market creates a pullback like this pullback is called an inducement. The market will what? Break structure again and close something like this below, right? Let me make this more okay. Okay, so you can see this what market did. Now, if you look at this, it's not exactly like this, right? But this is the pullback. So if I'm marking this pullback like this, right, it will be something like this, right? Pullback. So what's the first impulsive move to the upside? Pullback is this, right? This is it, right? And we call it inducement. It means an area of liquidity, right? Now, what happened after this pullback? There was a break of structure. Where can we? It means this previous low pulled back to the upside, then broke structure. It means we're looking at this low, pull back, then all these ones are noise, then structure broke here. Okay, you can see now this diagram now is exactly what we're looking at. Here now you can see when it made the market structure shift to the downside, it went up, first pullback. All these ones now noise. This is where we now saw another break of structure like this. So market structure shift, pull back, break of structure to the what? Downside. Market structure shift, pull back, which is inducement, right? Which is inducement, then break of structure to the downside. So all this other thing it was doing inside was just noise, right? So on SMC, if you want to catch a trade, what do we expect? If you want to catch a trade, right? What do we expect? We look at the POI. Is there an imbalance on this POI that push market structure? We want to see what a valid POI. Then we want to see an inducement, right? We want to see what an imbalance there. Then of course we have liquidity also. So what do we expect? If we want to take a sell trade, we expect market to trade, mitigate the imbalance, then come back down. Mitigate our imbalance and POI, then come back down. Right? So looking at this structure now, this is just a kind of move because the structure we have seen, this was a low that gave birth to a high like this. Market made an impulsive move to downside, 4 hour closed. First pullback is always what? Inducement for us. Then there was now another break of structure. All this one is noise. The swing low, this is the swing low, this is the swing high. Right? You can see any other one did not touch this high till market what took out the swing low and broke structure. You can see that 4 hour candle. So this is just the movement. So what do we expect? Now that we have seen a break of structure, we expect market to come. So is there a valid POI here? Of course, there's an imbalance. If you look at this pullback, it did not actually fill the imbalance completely, right? That was created there. So it means I can mark this last candle as a POI, right? And I have imbalance there. And I also have this inducement that market created, which was the first pullback after a market structure shift is what? An inducement. This is an inducement. So if market is coming back here based on this particular setup we have here, there will be possibility for market to sell because we have market structure shift, first break of structure. If market comes to take out that move, right, there's likely of markets, right, crawling in from these zones, taking out this inducement, tapping into the POI, then selling to the downside. And of course, we are not just selling to the downside. There is also what? Liquidity. Remember, if you watch my liquidity day 3 or day 4, be the 5 video, I talked about internal to external range liquidity, external to internal range liquidity. Okay, this zone is an inducement. And remember, when markets tapped into this region, there was an internal range liquidity here, which is the imbalance. If market has tapped from an internal range liquidity on an higher time frame, it's going to head to an external range liquidity. And where is the external range liquidity? This imbalance is external. While this is the swing low, this is the swing high. Market took out the swing low, tap into an imbalance. Now it's going to go back, right, based on the strategy from this internal range to an external range, right? After it takes out external range, where is it going to go back to? It's going to start looking for internal range liquidity. And we also have another imbalance here. So that gives validation for us from this setup. It gives validation that, oh, based on what this market has done, we can actually see market can range towards the upside and sell from this POI, right? After taking external range liquidity now, market can sell based on this structure it has created to another internal range liquidity, which is here. So from internal range, we would now have taken out, remember this low is also a weekly swing low. Now from internal range, we can now be targeting this external range liquidity, which is we can now target here. Means if market comes here, mitigates this, we can now target from this internal range liquidity, we can now target the previous weekly high, external range liquidity again. This is how market moves, right? And if you have been following me on Twitter, you see that sometimes I will just analyze 3 to 4 setups on how BTC will play out. What am I using to identify those regions? I know that SMC, we trade based on liquidity, right? If market has taken an external range, it goes to the internal range. If you don't understand what I'm saying, go to my day 4, day 5, where I talked about liquidity. I think I explained it 2 times, right? So based on the structure, now we also follow market structure and liquidity. Based on this structure, market formed inducement, break of structure. Market pulls off from an internal range liquidity, which is this first imbalance it tapped. You know, there's a 4-hour candle. Market created one impulsive move, another impulsive move, right? So market has filled 50% of this first impulsive move right here of this imbalance. Now there might be a push from this region to take out this external liquidity. So what am I looking out for? No matter how market is playing, no matter the dance it's playing right here, I'm not expecting market to come back down here, right? I'm expecting market to take out liquidity, which is this external range, right? Before getting a momentum. Remember when we talked about liquidity, we say it acts as a fuel that helps to push price, right? So I'm expecting market to actually come and take out this external range liquidity here, then tap into a supply zone, then start coming back down to fill this internal range, from internal again to external. But we don't know how fast it can do, how fast it's going to happen, right? We just analyze. So this is what I can see based on SMC, liquidity, point of interest concept. This is how I see the market moving, right? So we will just watch out and see. So if you are trading this, you can start looking for opportunities to even catch buy setups here. Of course, the one I've done, it's triggered and it's in profit, because I believe the market will start moving to target, because this external range liquidity, as long as we have taken internal, this place will be acting as a magnet. No matter how strong, right, the sell pressure might be inside this range, okay, it's going to be acting as a magnet to push price towards this region. After sweeping it, now price can now be looking for another stronger regions to sweep, which is this internal range liquidity here. And of course, there's still a weekly swing low for market to target, and there's also a weekly swing high. So after internal range imbalance, market can now go ahead and target this external liquidity. So that's how I see the market moves, especially when it's forming such ranges. So thank you very much, guys. I believe you must have understand one or two. If you don't understand this liquidity concept, I've done a video in the past concerning it so that you know what internal and external range liquidity is. Because on SMC, what do we train our eyes to see? We train our eyes to look for where liquidity is resting. We train our eyes to see the direction of the market. Then we look for a point of interest where we want to take our trades. Very, very simple, but not easy. Thank you very much, guys. See you in the next day.